Kailash Katkar, Managing Director and CEO, Mr. Sanjay Katkar, Joint Managing Director and CTO, and Mr. Nitin Kulkarni, Chief Financial Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Kulkarni from Heal Technologies Limited. Thank you, and over to you, Mr. Kulkarni.
Thank you, Nirav. Hello and good evening, everyone. I'm pleased to welcome you to all our earnings call to discuss our Q2 and H1 financial year 22 results. Please note a copy of all our disclosures are available on the investor section of our website as well as stock exchanges. Please note anything said on this call which reflects our outlook for the future and which could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company faces. Let me now hand over the floor to our MD and CEO, Mr. Kailash Katkar, to talk about major developments and key initiatives. Over to you, Kailash.
Thank you, Nitin. Good evening, everyone. We had a very successful quarter Q2 with a significant growth in revenue, earnings, and cash flow. Again, despite COVID challenges and considering last year's spillover, H1 results are not comparable, but still we had achieved at par results. Nitin will definitely cover the financial detail in his commentary. I am also happy to welcome industrial veteran Mr. Richard Stingman to our board actually. Richard comes with over 2 decades of experience across leading cybersecurity companies around the globe. Nitin will immensely benefit from his expertise with his guidance actually. At product front, Nitin has recently launched a new version of its flagship retail products to empower consumer to experience complete digital freedom without compromising on privacy. We call it as a hashtag freedom with privacy. Among the new features, the primary focus is on safeguarding digital privacy for new age consumers. The main highlight of this new version is the data breach alert, which will provide instant alert to consumers if their personal data like email, password, phone number, IP address is breached online. And we will definitely assist the customers to take corrective measures. As in modern times, consumers dwell more in a virtual world than in the real world, sharing personal data with companies for online transactions. However, doing so makes them very more vulnerable to online trackers who are always on the lookout for stealing and selling personal information to third parties. Quickly new products are designed to enable consumers to take charge of their online privacy and thus provide them with complete digital freedom while they surf on the internet. Products also focus on enhancing consumer security such as webcam protection, anti-tracker, anti-ransom, phishing protection, and much more. Regarding enterprise products, Securite development of new products, as mentioned in past, is in a full swing under the Hawk series. Securite also received recently top rank certificate for the prestigious institute AV-Test from Germany. Recently, CERT-In, which is from India, revealed that India witnesses a 300% rise in cyber attacks in 2020. The threat landscape in India is continuously evolving, with cyber criminals continuously chasing attack tactics. The rise in mobile and cloud application adoption for business operations has further put an organization's sensitive data at risk. I would like to conclude by stating that demand will continue to remain strong for cybersecurity products and solutions with increasing sophisticated attacks. With our dedicated efforts into new product development and threat research, we are looking forward to explore further growth opportunities. Now I would like to hand over the floor to our CFO, Mr. Nitin Kulkarni, to discuss our financial performance with you.
Thank you, Kailash, and again, good evening to all of you. Let me take you through the financial highlights for the second quarter as well as half year ended September 30th, 2021. As Kailash mentioned earlier, we were able to deliver good growth in the second quarter in a challenging environment. During Q2 of 2021-22, our consolidated revenue from operations grew by 23% YOY and stood at rupees 1038 million compared to rupees 844 million in Q2 of last year. 81% of our revenue came from retail segment and balance 19% came from enterprise and government. As things have started coming back to normalcy, the sale and demand for higher priced products in the retail segment has started picking up, which is evident from the fact that average realization increased for retail segment. The same has also gone up for our enterprise segment. Retail segment revenue has gone up by 18% on a YOY basis. Enterprise business grew by 16% due to good growth in SME segment. The half-yearly results are not comparable as the financial numbers of Q1 of 2021 includes revenue spillover of rupees 280 million from Q4 due to non-availability of transport facilities due to lockdown. If the revenue spillover of rupees 280 million in Q1 21 is left aside, we have registered double-digit growth YOY during H1 of financial year 2022. Even after considering this revenue spillover, we have recorded marginal growth in H1 over last year of H1. EBITDA for the quarter was up by 18% YOY and stood at rupees 463 million with a margin of 44.6%. PAT stood at rupees 346 million, up 20% YOY. Cash PAT stood at 385 million, up 14% YOY. I would like to highlight one important factor on the employee costs. Last year for the entire organization, increments were effective from October 1, 2020, and this year it was effective from April 1, 2021. Hence, the employee costs of Q2 as well as H1 of 2022 had an impact of 2 increments done during the last 1 year, resulting in higher overall employee costs compared to same period last year. In line with our continued focus on R&D and innovation, we increased our investment in R&D by about 19% on YOY basis, and it stood at rupees 201 million compared to rupees 169 million in Q2 of last year. While employee benefit cost was up due to mix of increased headcount and change in pyramid structure of organization coupled with annual increments as explained above. Now coming to sales and marketing expenses. Our sales and marketing expenses increased by 44% YOY basis to rupees 204 million from rupees 142 million in Q2 of last year. Of this, rupees 12 million is due to increase in employee headcount and other annual increments. As the economy unlocked after second wave, we also increased our spending on ATL related activities, and this has resulted in increase in sales and marketing costs in the current quarter. With lockdown restrictions getting relaxed during the quarter, there was an additional spend of rupees 5 million towards marketing travel. Now coming to general and administrative costs. G&A cost has increased by 18% YOY to rupees 125 million from rupees 106 million in Q2 of last year. This is mainly due to increase in employee costs due to salary increase. We also made doubtful debt provision for few of our customers on conservative basis in the current quarter, where collections have slowed down. However, we are hopeful of collecting these amounts subsequently. This has also marginally impacted our G&A cost in the quarter. Other income during the quarter has gone down by 37% YOY to rupees 37 million from rupees 58 million in the last year. This was partly due to reduction in the treasury size. We had a buyback cash outflow of rupees 1930 million in the last quarter, and also partly due to fall in the treasury yields. With this, profit after tax for the quarter increased by 20% YOY to rupees 346 million. PAT margin for the quarter stood at 33.4%. Cash profit after tax during the quarter increased by 15% YOY to rupees 388 million. Our effective corporate tax rate for the quarter was at 24.3% for standalone and same range for consolidated as well. Now coming to the balance sheet items. Our overall net working capital days increased to 109 days versus 93 days in September 2020. The increase in working capital days was the result of increase in receivable days from 141 days to 159 days. As you might know, several small and medium-sized enterprises are currently impacted with low liquidity due to lockdown restrictions imposed earlier, which has severely impacted their businesses. We have taken adequate measures regarding collection, and it is to be noted that our receivable days have come down to 159 days as compared to 220 days in the previous quarter as of June 2021. I would also like to highlight that almost more than half of total receivables are with our top 50 distributors, with whom we have been doing business for several years, and we are keeping a close watch on these receivables, and we are confident of their collection. We will continue to maintain our financial discipline and expect the debtor days to reduce over the next 2 quarters. Coming back to cash and cash equivalents, our current cash and cash equivalents stand at rupees 3166 million compared to rupees 4479 million in September 2020. This is including investment in mutual funds, fixed deposits as well as tax-free bonds. The decrease in cash and cash equivalents is due to deployment of 1930 million towards share buyback program. I would again like to highlight that we are cautiously looking for opportunity to better utilize the cash on our balance sheet. On M&A, we again remain very cautious and calibrated in our investments, and we are looking at smaller and medium-sized investments. Our current investment in L7 is a testament of the same. We continue to monitor the process of our investing companies so far and are quite satisfied with their progress so far. I also would like to give you the update on our service tax matter. The Commissioner of Service Tax Delhi has referred an appeal against the favorable order passed by sales tax amounting to rupees 561 million, covering a period from 2011 to 2014. Hearing for condonation of delay as well as admission on merit basis is still awaited. Overall, to sum up, since the COVID second wave lockdown restrictions were lifted, we are seeing strong recovery in the demand environment, and that has been visible in our second quarter numbers. We continue to believe the demand environment will remain strong with the vaccination gaining pace, economic activities gaining further momentum, and as need for cybersecurity becomes even more evident. Overall, the first half has been good, and we are well set for the next leg of growth. With this, we now open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Kranti from Wealth Mill Securities. Please go ahead.
Congratulations for the good set of numbers in challenging times. I just want to check when we have to compare this performance of cybersecurity. Okay, how in tandem with the PC sales are also going up. So the sales have been going with PC sales also. If the company have to benchmark with respect to the number of PCs sold in India.
So yeah, we are seeing the trend in similar fashion. I mean to say the PC sale is in upwards, but at the same time the operations disturb the market activity. So that way we do see as the relaxations happened, we started seeing good demand for even consumer products on all fronts, you mean to say online as well as the offline markets through the dealers and channel partner network.
Okay. So, just want to know, suppose if I have to see, okay, Quick Heal as a cyber security provider in India, okay, what is the market share of Quick Heal at present? Anything you have with respect to the numbers, just to have to quantify?
Currently, I mean to say there are no reports that I can back with, but what we get from our understanding, I mean to say all the figures that we receive through the channel partner network and the sales that is happened throughout the country for other competitions, our share stands around 31 to 32% in consumer segment, which is for Quick Heal actually. Yeah.
Okay, we can say the PC segment is concerned in India.
Yeah.
And this is my final question. See, most of the IT companies are currently facing the problem of one of the issues is attrition. So is the similar case with Quick Heal, or how you are foreseeing the attrition and the employee cost is concerned?
Yeah, you are right. So we too are facing the similar challenge, which is especially the highly skilled guys and experienced guys, and the attrition is high. So we are tackling that with coming out with good schemes for employees. At the same time, we build increments for throughout the organization in last I think Nitin can add to that.
Yeah, so see, just to add to what Sanjay said, yes, you are right. This attrition is a problem across the industry, and we are no exception to that. So we are also facing that problem, but we have been taking a lot of corrective measures, and to an extent we have been able to arrest it. But yes, there is a overall problem when it comes to attrition.
Okay, any percentage you can give, the percentage of attrition, if I have to quantify in numbers for Quick Heal currently, at present, last quarter at least?
No, so basically, attrition is there, and I won't be able to give you the exact number on the call. But yes, as I said earlier, we have been facing this problem for the last 6 months or so, and this is the problem peculiar across the industry. I won't be able to give you any kind of number on the call.
Okay, then. Okay, thank you. That's it for me.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Chirag from ASSPL. Please go ahead.
Hello.
Yes, Chirag.
Hello, sir. Congratulations for the good set of numbers. I'm tracking your company since quite long, and what I've seen is that entire IT industry is booming post-lockdown, especially in terms of order booking and all. And also the selling of this laptop, tablet and computers also increase day by day due to work from home culture and all. So where do you see ourselves going forward? Understand that the disturbances of lockdown and all impacted us a lot, but now the numbers from this quarter have started, somewhat normalized. Your view on same?
So if you rightly said the number of PC sale is increasing, and the product sale has also increased. If you look at the items number sold, that has increased, but people are going for a cheaper version. Like we have a range of products which starts from 1,000 rupees to 2,500 rupees. So this year what we have seen that the premium product sale has not increased. In fact, that has decreased. But our less cost products number of sale has gone up. But in last quarter, this Q2, the premium product sale has again started picking it up, and market has started coming back to the normal. Second point, what I wanted to tell you is there is a cash flow challenges in the market. So a lot of sale, some percentage happen through online and some percentage happen through retail shops. And the problem is the cash flow among these retail channel partners has hampered because of this pandemic situation, and that is creating big hurdle to do more stocking into the this retail partners. The demand is there, but the cash flow has a challenge.
So, to add to that, I can give the picture. You should look at our company as we are targeting different segments. One is the consumer, the other is SMB, which is small and medium businesses. And we are with the new products that we launched in last 3-4 quarters, we are also targeting large enterprises. And each of the segment has a different impact of pandemic actually. So if you see consumer, there's a buoyant mood now. We are seeing more of a demand from there. SMB has also started peaking as businesses are open now. Even SMB, we also consider revenue that are shown in SMB. There's a government sales also included in that. So government side demand has also started picking up. So that segment is also started seeing good results, and I'm sure that we'll be having similar results for coming quarters. And the large enterprises is something that is a new segment for us, which we have started with our EPS product, which is scaled up for large enterprises, and gradually we are also scaling up our other products like EMM and firewall, all those. So that market has a different, has a little effect of pandemic, as they are more getting ready for work from home culture, where their IT spending has gone up, and so the cybersecurity spending is going up there. So we feel that will be the added revenue to our segment as we keep adding more products to that segment.
Okay, sir. Sir, I have one follow-up question on what you said. Like in one of the quarter, you answered to me like this SME and large enterprise, we are developing products and the approval take time. So any concrete deal which has happened in last 2 quarters, like for develop solution under R&D department?
So if I have to tell you about the new product development, as I had mentioned that development is in a full swing actually. The products are yet to release to the market. But if you look at the presentation for whatever we are selling as an endpoint security, the large deal which happened in this quarter, and if you compare with the quarter one, so in quarter one there were 8 deals which happened, and in this quarter there are somewhere around 14, no? You just go to the presentation. So the Q1 was 18.
So see Q1, if you see the investor presentation, in Q1 we have added about more than 500 endpoints, which we call it as a mid-size large customers, about 10 customers on enterprise side. And in the current quarter, in spite of all the challenges, we have added about 24 customers.
Okay. So total 524.
No, so 24 customers.
Okay, on large side.
Yeah, that's correct.
Okay, sir. Okay, thank you. I will have more question. I will come back in queue.
Okay.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Rahul from PRP Professional Edge. Please go ahead.
Hello. Hi, sir. I want to know, how do you plan to utilize your investments into mutual funds and government bonds and securities? So any plan about utilizing these funds for business or to share for shareholders, something?
So yes, so the cash whatever we have, so see we did a buyback about a quarter back, and we returned the cash back to shareholders. But definitely the cash whatever we have and investments in mutual funds, they are definitely meant for organic and inorganic needs, and we are continuously looking out for inorganic opportunities, and that is where we will be utilizing this cash. So it is mainly for organic and inorganic needs.
Okay. One more question. So, can you help me with the bifurcation of your receivables that you hold? I mean, you have into retail and for government, the percentage that is for retail and for government?
Yeah. So if you look at the revenue split, it is around 80% retail and 20% enterprise. So roughly you can take the same percentage, little lower for enterprise side. So maybe I can say around 85% for retail and 12 to 15% for enterprise.
And bifurcation for government?
So government anyway, it is part of enterprise.
Okay. Okay. Thank you.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Stella D'Souza from JK Investments. Please go ahead.
Hello.
Yes.
Congratulations on your great set of numbers. I just wanted to know that your working capital days have gone up compared to last year. Can you throw some color on it, and could you provide an outlook for the same?
So as I said, this is Nitin. So as I said in the opening commentary, so basically this pandemic has created a lot of pressure on the overall dealer ecosystem. And in the last call also we mentioned debtor days. In fact, if you look at debtor days as of June 2021, which was last quarter, debtor days were at 220 days. And we have made a significant progress in this quarter. And as things have started opening up, things have eased out a little bit. So we have done a very good amount of collection. And in September 2021, debtor days have come down to 159 days. Having said that, there is definitely overall liquidity pressure in the whole ecosystem, and we definitely feel that debtor days will remain in this range in next 1 or 2 quarters.
Okay, thank you. One more question. Can you help us understand how you do business in the retail segment, and what kind of competition are you facing currently?
On the retail segment, I think I've explained earlier, we are seeing good amount of traction as we've started seeing shops opening and lockdown restrictions relaxed. We have seen there's a good demand coming from offline market. I mean to say non-online, which is our biggest chunk in our retail segment. And we do see that this trend will continue unless we don't see any further COVID wave or anything. So because there's quite a lot of PC sale that has happened, it should impact the demand there actually. So we are expecting good demand from that segment and the SMB segment as well.
Okay, thank you. That's all.
Thank you. Participants, you may press star and one to ask the question. The next question is from the line of Rahul Talwar from AB Advisors. Please go ahead.
Yeah, hi sir. Thank you for taking my question. So my first question revolves around the new enterprise products. So can you please elaborate on them as in which are the products you are planning to launch in next year, the new enterprise products?
So I cannot give more details, but for recent launch that is there is about EDR, which is endpoint detection and response, is something that we are going to enter that market, which is a logical extension to endpoint security market. And along with that, zero trust products are planned for the coming future quarters actually, and something more related towards data privacy and other compliance actually for organizations. Yeah.
Okay, sir. I understand. Okay. So my next question is, can you throw some light on the provisions that are made towards the debtors?
So yes, so in this current quarter, we have made provision of about 6 million rupees for doubtful debts. So basically, these are, as per our policy, as soon as debtor goes beyond 365 days, we do a provision. But we do a follow-up and we collect significant part out of the provision. So to answer your question, we made a provision of about 6 million in the current quarter.
Okay, sir. Okay, I understand. Okay. And so my another question, revolves around the working capital cycle. So, if you don't mind, can you please throw some light on how the working capital cycle is for retail and enterprise business? How does it vary? And what is the outlook for both the segments?
Okay. So working capital mainly covers debtor days. So I talked about this earlier, but again I will repeat. So for retail, so payment terms for both retail as well as enterprise customers, they are more or less similar. It is in the range of 45 to 60 days. But in case of enterprise customers, generally we get payments on time or with little bit of delay. But when it comes to retail segment, which is more of a stock and sale model, where we have more delays in collection. And basically, because of the pandemic in last 1.5 years, since I said earlier also that there is a huge liquidity pressure on the entire dealer ecosystem. And because of that, in retail, since the retail is 80% of our business and where we follow stock and sale model, so debtor days are more in case of retail. So if I have to say, from 159 days, majority of the outstanding is for retail. And in case of enterprise customers, we have been collecting, there are few delays, but more or less we have been collecting money on time. Hope that answers your question.
Yes, sir. Yes, sir. It does answer my question. Thank you, sir, and all the best.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Chirag from ASSPL. Please go ahead.
Hello. Sir, I have a question. In last 1.5 year, due to unavailability of raw materials and parts, the entire electronic industries has increased the prices, including laptops and computers. Do we have taken the same step for our products and services?
No.
Okay. But as you answered me in my earlier question that the demand for cheaper version solution is in more on retail side, right? So why we have not taken such step? Because entire IT industry has taken a price hike on equipment side.
No, it is not that way. The strategy for product pricing and everything is well designed by this set of people, like the sales head and the regional managers, zonal managers, and it is a conscious call which we take. As I told you that in this pandemic situation, the consumer, they themselves are facing financial challenges, and in that we cannot increase the product prices actually.
Okay. But even in telecom also due to demand of internet is also a kind of service. They gradually inched up their average revenue per user by increasing the internet pack prices slightly, like let's say in a very small amount, but on a longer horizon of 7-8 quarter, if you see, it almost increased by 10 to 15%. The recharge pack. So same way, like in cheaper version, there is a scope if the demand is more on that side. That's why I'm asking that.
Also, I understand your point. Also depends on the competition pricing, and that's where the regional heads and the sales guys take the call. So it's more of a market-driven price, and MOP is driven by all the activity, even from the other competition. And we have seen price drops in most of the competition. In fact, Concall has maintained the prices even in these situations.
Okay. So in future, is there any plan to cut the discounts which we offer on bulk purchase, like 3-year or 5-year extension of service pack?
This is not a single person's decision. This is a very team strategic decisions are being taken on a quarterly basis. So no one here will able to answer in a very correct way about the pricing part of it. And when it comes to the pricing, it is a very sensitive point where no one can take a single person cannot take a decision. So it's a team decision actually.
Okay, sir. Thank you.
Thank you. The next question is from the line of Nikhil from Galaxy International. Please go ahead.
Yeah, thank you. Thank you for taking the question. Just a couple of points. First is, let's say the new products that we are developing, when do we start to see, let's say, the launch of the first products? So that is question number one. And second is, let's say, how many new products are we planning in total? And are they basically, let's say, focused towards the enterprise segment only, or do we see anything for the retail side also? Thank you.
So most of our launch that are planned, which is couple of products in the last quarter of this financial year, and all our future launches are focused on enterprise segment, and more particularly on large enterprises. And whenever we do a product launch, what we have seen is it takes certain time for a product to get stabilized and get to the level where distributors and partners and pre-sales guys are able to pitch it to the organizations. So we are already starting the training and education part, but dealers and partners or system integrators take time unless they see the product and have hands-on. So this is the process. It takes at least a quarter or a couple of quarters to start seeing some impact on the revenue. But the product gets mature after the first version and the second version as follows. Once the product gets mature, then it becomes a fast revenue adding product actually. So this takes a long time in a product thing. So I need to say product will be launched this financial year, and further more products will be launched in even next financial year. And we expect these products to get stabilized and start giving revenue. Some revenue in next financial year and much better revenue in the further financial years actually.
Okay, thank you. So if I can just continue on that. So I understand that it takes a long time for the products to start giving you revenue. So if I take a 3-year horizon, so let's say in 2024-25, what percentage of our revenues, let's say, we can expect or we are targeting to get from these new products that we will launch this year, next year? So any aspirations or any guidance?
So for in next 3 years, we are planning to have a ratio of 50-50%. It totally depends upon the market acceptance of the product and the challenges which we are going to come across after product launch. So Kailash means to say the enterprise segment, which is contributing 20% right now, our focus is to increase that to 50% in next 3 years. And the additional revenue we are hoping from potential new product launches actually. And the target is definitely large enterprises, so that we will have lesser impact of such pandemic related or any other business disruptive impacts, because large enterprises cybersecurity spending remains quite steady throughout actually.
Right. So just maybe if you allow me a liberty, I will just ask one additional question. So on the margin side, let's say right now enterprise is 20% and retail is 80%. So once the enterprise moves to 50% over the next 3 years and retail also grows, but will come down overall to 50%, do you expect that the margins will come down on a consolidated basis in terms of percentage? I am saying obviously absolutely it should increase. And a related question becomes, let's say that are our margins in enterprise segment and retail segments different currently, or they are roughly similar?
So to answer your last question, the enterprise side, we are making a lot of investment. So yes, margins in enterprise segment are lower than retail, and retail is having better margins compared to enterprise. And on the first question which you said, so yes, as Sanjay also mentioned that a lot of investment is happening on enterprise side on this new product development. So initially there will be impact, but as gradually we start getting monetization from these products, which will have a huge upside, and that will definitely take care of the margin what we are maintaining it to.
Okay, fair enough. So I may have some other questions, but I will come back in the queue. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Stella D'Souza from JK Investment. Please go ahead.
Thank you for taking my question. I just wanted to know what is your view on the antivirus industry from the retail space? Like, how is it growing? What are your views? How do you think it will pan out in the future?
So if you are talking about retail, when we are saying antivirus, it becomes a consumer product, which we feel that there is after this event of pandemic, we have started seeing good movement in the PC market and laptop market, which has given a good
life to this product. I mean to say, so we do see higher single digit or at least early two digit growth in this segment actually. So that's the hope actually, and of course we being having offline as one of the major contributor, it also is depends on the market's openness. I mean to say, unless there is no further lockdown, and it shouldn't be a big challenge actually.
Okay, thank you. My next question is, where do you see the pricing for license stabilizing in the retail segment?
So we always play with the product mix. Actually, we have products in different ranges. So total security, which is the highest selling product, as well as the costliest product among us. So we do try and play the product mix game, try to make sure we get revenue out of the situation. So that's what we keep doing to maintain the product RPU at certain range, and that is what we have been able to successfully do over the last 3-4 years. The ARPU has not moved too much actually, in spite of lot of competitive price pressure from other competition, and I'm more hopeful that we'll be able to maintain that even in next couple of years actually.
Thank you for answering my question. Take care.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Nikhil from Galaxy International. Please go ahead.
Yeah, thank you. Just a couple of more questions actually. So we had this investment in the Israeli security company. So if the management can give some view on how the things are progressing at that end. So that is question number 1. And second question is that given that our new products are being targeted towards the enterprise segment, right, and the large enterprise segments, what gives us and what do we believe is our right to win, or let's say the key differentiator, which will help us to win the business against the global giants in the security space, so in the cyber security space. So that is my question too. Thank you.
Yeah. So to answer your first question, the investment that we did in L7, which is that Israeli company, the investment was done at the stage where the product was still under development, and we have been following them quite well. The product is now in the release state, is coming to release soon. We have already started giving demos of the product to Indian large enterprises and started seeing good interest from these customers as well. So this is at this stage where we have started seeing the interest in the product. And as such, this product is particularly for very large enterprises, which deals takes time for the deal cycle is bigger for such products. So it will take some time for us to contribute in the revenue side from these products. But definitely it has progressed, and we have started seeing some customers with these products actually. And to answer your second question, which talks about what is the differentiator that we have for the new products that we are coming up, we have opened up a new product management vertical where they are focused on the current products which are there from the competition, and what are the missing points actually, and what is it that the enterprises are looking for which are missing in even the large products. And that's where we have developed the differentiators, which I cannot explain technically here, but definitely we are working on the differentiators, as the cyber security challenge is a fast moving thing actually. It's not the same every year. So things are changing, and we are trying to cover things which are missed by the competition, and we'll be making sure that we have a good differentiator which will help our sales guys to pitch it to the large enterprises in front of the competition. And since we have the product manager, the CPO which is sitting in US, and project managers for these products who are well experienced, coming from industry veterans, coming from the competition there, and we are quite confident about the product that are going to get released.
Thank you. Thank you for answering my question. Thank you.
Thank you. The next question is from the line of Manoj Shah from Laxco Investments. Please go ahead.
Yeah, thank you for the opportunity. Can you just comment on the cybersecurity market penetration in retail and the enterprise segment in India? Like per 100 PC of the laptop sold in India, how many people purchase the cybersecurity or the antivirus software basically? And what is your strategy to expand the market, like either by keeping the price at a lower end, or what's your strategy so that you can, once the customer is on board, then you expect him to renew the license every year? So what's the strategy there?
So it's a good question. I mean to say we have been tracking the cybersecurity market globally as well as in India, and we are also trying to expand globally. So what we have seen is cybersecurity spending in India is quite low compared to any other developed countries or even certain developing countries, and that is where it also points towards the potential that India has. Since in last 3-4 years we have improved a lot on digitization, e-governance, and all these things have really been or brought the cybersecurity to the center stage actually, and that's where there is no option then for any enterprises to invest into cybersecurity products. Currently, as you rightly said, we are not very much. Most of the organizations are not very much investing into cybersecurity, but this is the trend for SMBs, I need to say, and even on the consumer front. Very large enterprises or BFSI, among all the sectors, BFSI is the only sector which is closer to the Western or developed countries spending on cybersecurity. But then it leaves with huge vacuum on the other front, like telecom or even pharma and manufacturing and other verticals like even education. So we do see that there's a huge scope where these kind of investments will grow as we are seeing more and more attacks as people are going digital, and the current situation of work from home and all, every organization has to work on IT or automation and digitization of their business, which will bring in demand for cybersecurity products. So we are trying to increase the cybersecurity awareness by creating a lot of programs and holding a lot of seminars vertical wise. In fact, I just came up from one of the seminars which was targeted towards the rural or smaller banks actually, which are very unprotected or not well protected from the cyber attacks and facing huge losses due to unprotected networks. So that's what we are trying to do: educate all these verticals, take seminars, advertise, and reach out to these, do send mailers is what something activity or steps that we are taking to do the cybersecurity awareness.
Okay, I've got one more question. One is that like your R&D spend as a percentage of sales is roughly around 19% for this quarter. So what percentage of sales you are targeting your R&D spend over next 2-3 years? So what ballpark target percentage you have in mind over next 2-3 years?
Yeah. So as Sanjay also said that a lot of investment is getting made. So if I have to talk on annual terms, the R&D spend on an annual basis would be about 22 to 23% of our revenue.
Okay. And now coming back on this, like what strategy in the sense that what are you experiencing? Is it the mindset, since you are more of a retail-oriented company, 80% of your sales is towards the retail rather than enterprise, and enterprise you want to increase it from 20 to 50% as you said, but currently it is mostly retail. So what's the impediment in the retail segment, in the sense that customer adopting, what it is hindering him to purchase an antivirus software? Is it the cost is high, or is it the mindset you don't want to purchase? You want to spend on a 50,000-60,000 laptop, but you don't want to spend few thousand rupees on the antivirus software kind of it. So is it the mindset issue or is it the price issue?
See, I think as Sanjay has also, answered this point in past this thing, we have a range of products. So we are catering to all customers. The customers who are more serious about their protection and security, who are ready to buy premium products by spending more, we have a product for them. And for those customers who are more price conscious and they don't want to spend too much money on antivirus software. For them also we have a product with a different layer of protection. So we are catering all kind of customers. It is not something we have only 2 products in retail. We have a range of products in retail actually. So we are not losing any part of it. But that doesn't mean that we will able to cater 100% customers, because there are so many products in the market. There's a competition in the market, and there are so many people who don't believe that protection is required. So until we have a good number of and market share. Like if you, as Sanjay rightly said, that we don't have any survey as such reports, but whatever we have, we are present across India, and whatever channel partners we are dealing with, we try to get all this information, that how much product they have purchased from Quick Heal, how much product they have purchased from the competitors, and based on that, what we find out is we are close to 32-33%.
So, and what our observation is that people think of antivirus only when they face a challenge actually. I mean, that they are facing some operation challenge or something. After that, they start thinking about security, not at the time of buying. And on the, as Kailash said, we see that we don't lose any of the market segment. So on lower price market segment, we have a product which enters there, and then we have a program where we keep following up with the customer to upscale his product actually. So at the time of renewal or any challenge if a user faces because of the product he is using, which is at a lower cost product, and if he is doing a lot of business activities, we pitch him the total security version. So those programs are there, and in fact we are regularly tracking and making sure that we move certain part of low segment business to a higher cost product, and that's how we are able to even gain traction on the higher side cost product as well. And those customers who are with us since years, most of them have moved to total security because they have moved to premium products actually. So that's the confidence that shows they have in our product, and they realize the importance of security. So that's the trend as well.
Can you just reconfirm? You said 32-33% is the penetration level for the cyber security software in India. For 100 PC, 32 or 33 would be buying the cyber security product.
I cannot comment on that. I just said that whatever we do our own survey with the channel partner.
Okay.
So there are no figures available. I mean to say, see, there are different markets. One is like there is a segment which don't even buy the product. Actually, they go for either OS version antivirus, which comes with the OS as a free version, or they download certain free available antiviruses unless and until they face a virus challenge or a ransomware challenge, which then they realize they need a better protection or a paid protection which is much up to date, and then there's a service attached to that. So that happens gradually. So that's what we have observed actually. Yeah.
Okay. Thank you very much.
Thank you. And the next question is from the line of Rahul Talwar from AB Advisors. Please go ahead.
Yeah, thank you again for taking my question. So sir, for my first question is just a follow up on the previous participant's question. So you said that the customers usually consider taking an antivirus whenever they feel the threat. And according to what was said in the initial comments, the cyber attacks has been increased since the COVID has started. So basically, has the total income increased by 464 as compared to last quarter because of this reason?
Yeah, see, to answer your question, like if you want to see the margin part of it, you can check all the quarter results and ARPU part of it. Okay, you will get to know whether the earnings per license has increased or not. And second most important thing, like we really don't compare quarter on quarter basis because market and the customer sentiments are totally depend upon the market economy. And if you see for last 2 years, the economy of our country, because of this pandemic, the people are facing lot of challenges, and based on that, like as I said earlier also, that in last 1.5 year, our premium product sale has gone down and our low cost product sale has gone up. But now in last this quarter Q2, our premium sale has started picking up again and coming to the normal situation actually.
Okay, sir.
So there's a slide number 14 into
No, so basically just to add to what Kailash said, so if you look at, as Kailash mentioned that for last 1.5 years, the lower price products were getting sold, and we have seen uptrend in Q2 of current year. And if you look at, you can easily calculate ARPU based on, we give data for license sold as well as revenue. So ARPU for retail segment, current quarter compared with Q2 of last year has gone up. It is 523 in Q2 compared to 509. And even if you look at on a half yearly basis, it has gone up compared to half year of last year. So that is what Kailash just mentioned, that we are seeing little bit of uptake in last 3 to 6 months where the higher price products are getting sold more.
Okay, sir, I understand. Okay. On just the last question on the same thing. So as in the initial comments itself, it was said that considering the increase in cyber attacks since the COVID has started, just wanted to know how often does Quick Heal provide updates for its products if we compare it with its peers such as Kaspersky or Norton. Also, has the probability of providing updates to such products increased since the COVID has started, or is it still the same?
So, see, the update frequency changes depending on the threats that we see, but on an average, we release 3 updates per day for all our users, and sometimes it goes to 5 updates depending on the situation. Actually.
Okay, sir.
Quite comparable, need to say much better, but update is not the comparison measure. I mean to say, if you compare Quick Heal's detection and performance, there are international certifications which keep an eye on all the products, and Quick Heal is being one of the products that is kept monitored, and Quick Heal was listed as top product in last quarter itself, the tests that were published in Germany actually. So the test is about detection and how well proactively we protect our users.
Yeah, right. Okay. That's all, sir. Thank you so much.
Thank you very much. I now hand the conference over to Mr. Nitin Kulkarni for closing comments.
Thank you all for joining the call. I hope we have been able to answer the questions raised by you. In case if you need any clarification or any additional input, you can get in touch with EY, who are our investor relations advisor. I wish all of you and your families happy and safe Diwali. Thank you, and back to you, moderator.
Thank you very much. On behalf of Heal Technologies Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.